Can you find growth opportunities for the rest of 2023? That's what we'll be talking about in today's video. We'll discuss growth stocks versus growth opportunities. They are out there. You just have to know where to look and you will find them. Let's talk about it. Okay, so growth stocks have fallen out of favor over the past couple of years. Obviously, the bear market, inflation, the economy, they all have adverse effects. But clearly, money is still being made every day in the market. We know that. But even in markets like this, can we expect that opportunities still exist? Is that safe to assume?
Yeah, opportunities still exist, but I wouldn't go looking for growth from what you would call a growth stock. Small startup companies that are dependent on debt are going to have a hard time finding money and financing their growth. But the big blue chip players, which have the leverage and the capital to invest in their growth, should be able to perform fine. Starbucks is a great example. They've got more than 10,000 stores worldwide, and they are still growing due to the power of the brand. They're able to leverage their brand, leverage their capital structure to grow the business. And like I said, those newer brands will have a much harder time.
Yeah, those factors certainly have an impact on companies with limited earnings. Chris, what's your take on that?
Yeah, I agree with Thomas. I mean, you and I have talked about this before, Lacey, and I've talked about this with Thomas too, is that, we're in a market right now where this isn't a time to be looking to hit the home run. This is a time to just be singles and doubles are fine. Whatever gets you on base, whatever keeps your portfolio
Base
above
hits.
water. There's 6,000 some stocks that trade publicly, and there are opportunities out there, but you have to be selective. This may be a really, really good time for retail investors to look at ETFs. I know in my conversations with Don, MarketBeat has a lot of customers that like to pick their own stocks, but ETFs are a really good choice because it kind of takes a little bit of that guesswork out of there. You might be trading a little bit of growth or a little bit of yield, but you're going to be probably sleeping better at night. MarketBeat also has a lot of stock screeners that investors can use to pick individual stocks based on specific criteria. I've been using the screeners lately just to kind of create a watch list of stocks that I might want to be looking at to buy, not now, but down the road.
Okay, you mentioned the stock screeners. Chris, can you tell us a little bit more about using stock screeners, how you're finding the opportunities you're talking about, and maybe share some of the stocks that you're looking at?
If I could just comment real fast, I just wanted to say that, that using the stock screeners is a great idea, and building a watch list right now is really one of the best things to do because the times are changing. We're still in that shift to what the new normal is going to be. And so finding a watch list of the stocks that are meeting your criteria now so that you can see what the price action is doing, determine some entry points, and just kind of get prepared to buy those stocks later on down the road when they get to your price points.
Right. And that's a great point for me to jump off of. I mean, the thing I like about the MarketBeat stock screeners are you can make them as broad or as specific as you want to make them. You can get granular and say you're looking for stocks that are trading with a certain price volume. You can say I want to find stocks that are trading that are projected to have more than 10% earnings growth, or you can even go to Thomas's point of saying I'm looking for a stock that is trading at a certain price or it's trading below a certain price. So you can do a lot. One thing I have found is sometimes if you get too specific, you might not get the amount of results you want. But if you broaden it out a little bit, you can at least get a list to start with, and then maybe you go back and you can fine tune it a little bit more. But they're really, really great tools. And many of them on MarketBeat are there for free, and others are free if you're an all access subscriber. Two stocks, Lacey, because you mentioned if I had two stock picks. One that I was looking on the screener that I found, it's been on my watch list for a long time, is Generac. And boy, I wish I had bought that one because that thing took off yesterday.
Isn't that how it always works?
Unfortunately for me, more times than not, it is. I had been staying away from Generac because, like Thomas was saying, I'd been taking this time to, like over the last year, I've culled back my portfolio a little bit. I've been trying to make sure I was focusing on the names that were the singles and the doubles. Generac was one that I've had my eye on, but it had pulled back, but it wasn't showing any signs of bouncing forward. And sure enough, it did. Good. That's good for the people that jumped in there. Another one, a pick that I found was I was just looking around for mid cap stocks because I've been kind of on a thing of looking around at the mid cap area because I kind of like some of the stuff I'm seeing there. And I was looking for mid caps that are projected to have strong earnings growth. Thomas and I both talked about this. Earnings growth is the mother's milk of the stock market. It's what's going to drive things. And I found a company, Top Golf / Callaway, which is MODG. Boy, stock's up like 12% already this year, projected to have really strong earnings growth for the rest of the year. It's one that I've got on my list, and it doesn't pay a dividend, and that's kind of keeping me away from it right now, but it's one that I'm certainly watching.
Yeah, right. Just to Chris's point with the Generac, it's always hardest to buy stocks when you should, when they're down.
Yeah.
It's like you don't want to buy stocks when the market's chasing them higher, but when everybody's like, oh, that stock is terrible, and they're selling it off down to a low level, it's hard to be the contrarian and buy those stocks then. But that's what the watch list is for. You build your watch list, you watch this stock over time, so you know this is a good company. You know what the normal is, and say today's bad news has the stock down, but it's not that bad in the big scheme of things. And now today is a buying opportunity. So,
All right, Thomas, with that, what growth opportunities have you been looking at?
Well, my pick is Camping World. All right. Camping World is not a growth stock, and it's really not in a growth industry, but it is a growing company. All right. They have a lot of debt, but they're leveraging that debt to buy dealerships and consolidate a largely unconsolidated industry without competition. I mean, sooner or later, Marcus Lemonis is going to own all of the major dealerships in every state, and it's just going to be Camping World everywhere. So right now it's using debt to finance this growth. But each time they buy a new company, they're improving their cash flow. All right. So when they stop growing, they'll start using that cash flow to pay down debt. And then we'll have this company with no debt and great cash flow that's been paying a 10% dividend yield the entire time. The 10% yield is really what got me when I started looking at this stock, but also its position within the RV industry. It's not an OEM, and it does sell new RVs, and that's a major part of its business, but it's also exposed to the used RV business and also the aftermarket and supplies business, which is helping to sustain the company right now. RVs in general, the OEMs are seeing like a 30 to 50% decline in orders and deliveries. Camping World saw, I think, like an 8 or a 10% decline in business. Most of that was in new RVs. Used RVs actually grew, and then the supplies and services was kind of flat, so it's just good company.
All right. So it sounds that despite the challenges in the market, there are still growth opportunities waiting to be discovered. The key lies in being selective and strategic in your approach. We know that. Utilize those stock screeners. Thank you both for shedding light on these strategies. And as investors, we're going to keep exploring, learning. We're going to make the most out of these growth opportunities ahead in 2023. Thanks, guys. And I'll talk to you soon.